Welcome to the Deep Dive. We're the show that tries to, cut through all that market noise and get to the core truths behind complex topics. Have you ever been there trying to figure out a company's potential? You see these amazing success stories, but then there are these pretty big challenges looming too. It feels like trying to predict the future sometimes, doesn't it? Especially in tech. Well, today we are taking a deep dive into advanced micro devices, Inc. You probably know them as AMD. And our conversation today, it's not based on guesswork. We're pulling directly from a really comprehensive, deep equity analysis report. This thing is packed. Financial health checks, a close look at competitors, detailed valuation models. It gives us a balanced view, which is what we need. So our mission today is pretty straightforward. We want to unpack the current investment case for AMD. We'll clarify those often conflicting views on where it's headed and really shed some light on why this semiconductor giant, despite this incredible run it's had, presents such a complex picture for investors right now. By the end, you should have a clearer perspective, a better handle on what's really going on. Let's jump in. Okay, so let's start with this journey AMD's been on. It's pretty remarkable. For ages, they were seen as, well, the underdog, right? Mostly focused on consumer stuff. But the analysis really points to this deliberate strategic transformation. They managed to pivot, shifting their focus to become a data center first company.
Exactly. And that's huge because, as the report notes, that data center segment, it now makes up almost half their total revenue. That shift is critical to understanding them now.
So how did that strategic move play out, especially against their old rival, Intel?
Well, what's fascinating here is just how effectively that shift let them, frankly, triumph over Intel in the x86 CPU market. And this wasn't just a minor win. It showed how powerful a single, really well-designed chip architecture, the Zen microarchitecture, could be. They focused on multi-core performance, innovative chiplet design, and Zen just delivered better performance and value, especially for servers.
And the numbers back that up.
Oh, absolutely. The numbers are stark. AMD's EPYC server CPU market share. It's expected to hit nearly 40% in Q1 2025. Just think about that. 5 years ago, it was maybe 4%. That's a massive leap.
Wow.
Yeah. And it was, fundamentally a hardware-driven victory. They really turned the tables on Intel there.
And part of enabling that hardware win, the report mentions their fabless model. Can you unpack that a bit? What does being fabless mean for them?
Right, the fabless manufacturing model. It means AMD doesn't own the super expensive factories, the foundries or fabs. Instead, they focus their energy and money on the design, the R&D, the marketing.
Yeah.
The high-value stuff, you could say. And they outsource the actual chip making, the manufacturing, to partners like TSMC, which is Taiwan Semiconductor.
So that lets them be more agile, maybe, not tied down by massive factory costs.
Exactly. It was absolutely crucial for their turnaround. It let them pour resources into innovation, not just, building and maintaining fabs. It helped them scale fast. But as we'll get into, that reliance on outsourcing, especially to TSMC, brings its own set of risks now. And look, you really can't talk about AMD's comeback without mentioning Dr. Lisa Su. She took over as CEO back in 2014.
Right. She gets a lot of credit.
And deservedly so. She's seen as this visionary leader who really engineered one of the biggest corporate turnarounds we've seen in tech, pulled them back from, well, almost irrelevance. Her strategic focus was key.
And you definitely see that turnaround reflected in their financials, I assume.
Oh, yeah. The report calls their top-line growth nothing short of spectacular. Think about this. Total revenue went from about $6.7 billion in 2019 to $25.8 billion in 2024.
That's huge growth.
It's a compound annual growth rate over 30%, year after year. Plus, their gross margins expanded significantly. GAAP margins hit 49%, and the non-GAAP figure reached 53% in 2024.
Okay, can you quickly clarify GAAP versus non-GAAP for listeners?
Sure. GAAP is the standard accounting rules, generally accepted accounting principles. Non-GAAP usually adjusts those figures to exclude certain things, like stock-based compensation or one-off charges, to give what some see as a clearer view of core operations. And that margin jump mostly came from selling more of those high-margin server CPUs, the EPYC chips. They were really firing on all cylinders.
Okay, so that's the story of AMD's incredible rise. Comeback kid, the CPU powerhouse. That's the bull case, right? But here's where, as the report lays out, it gets really interesting. We have this tale of two competitors. Because while AMD beat Intel at its own game, the fight against Nvidia, especially in GPUs for AI, well, that's proving to be a starkly different story, isn't it? A whole new challenge.
It absolutely is. And this raises a really important question for investors. In the GPU space, AMD is, well, frankly, a clear underdog. The market share numbers are pretty brutal. For discrete desktop GPUs, AMD's share fell to a historic low, just 8%, in the first quarter of 2025. Nvidia, they grabbed 92%.
92%? Wow.
Yeah, But the real story, the big money, is in the data center GPUs, the chips powering this whole AI revolution. And there, NVIDIA's dominance is, well, it's nearly absolute. Some estimates put NVIDIA's market share at 98%.
98%, that's almost a monopoly.
Pretty much. It's staggering.
And NVIDIA's strength, it's not just about having fast chips, is it? The report talks about this formidable moat, their CUE platform. What is CUD and why is it such a big deal?
Right. CUDA is the absolute key here. It's NVIDIA's proprietary software platform. Think of it like a special operating system for their GPUs, designed for parallel computing. Crucially, it makes it much easier for developers to write software that takes full advantage of NVIDIA's GPU power, especially for AI. And here's the thing. CUDA has been the standard for AI research and development for over a decade.
A decade.
Yeah, so almost all the AI models, the frameworks, the tools people use, they're built and optimized for CUDA. This creates this incredibly deep, sticky software ecosystem. The switching costs for companies using CUDA are extremely high. Moving off it is difficult, expensive, and time-consuming.
So it's not just about building a faster chip for AMD. They have to somehow break into that ecosystem. How are they trying to do that?
Well, their main weapon is their Instinct line of AI accelerators, and they're gaining some traction. The report mentions over $5 billion in sales in 2024, which isn't nothing.
Okay, $5 billion is significant.
It is, but they face this immense challenge with their software alternative, ROCm. ROCm is AMD's answer to CA. It's open source, which has appeal, but it's still playing catch-up. It doesn't have the maturity, the breadth, the developer support that CAD has built over 10-plus years, and the report really stresses this point. Assuming AMD can just repeat its hardware success against Intel in this new AI GPU arena, well, that's a flawed idea.
Why flawed?
Because this isn't just a hardware battle like the CPU fight was. This is a two-front war. Hardware and software. Nvidia has dominance on both fronts, especially software. It's like trying to compete in Formula One by building a great engine, but your rival owns all the racetracks, pit crews, and fuel depots. It's a fundamentally harder challenge.
That platform advantage really changes the game, and this fight seems to be impacting their profitability, too. The report highlights a gap there.
Significant gap, yeah. AMD's TTM net profit margin that's trailing 12 months is around 8%, which, is respectable for many companies.
But compared to Nvidia,
it's dwarfed. NVIDIA's TTM net profit margin is an astounding 55.8%.
55.8%.
Exactly. That massive difference means NVIDIA just has vastly more cash to plow back into R&D, into building out its ecosystem, into staying ahead. It fuels their dominance.
So lower margins mean less firepower for that two-front war.
Precisely. And there's another key risk we need to talk about, going back to that fabless model.
The TSMC reliance.
Yes. Their complete dependence on Taiwan-based TSMC for their most advanced chips introduces this significant geopolitical risk. Any major disruption involving Taiwan, politically or otherwise, well, it could potentially cripple AMD's entire supply chain. And that's a risk that's very difficult, maybe impossible to fully hedge against.
Okay, so we have this picture. Amazing CPU comeback, but now facing a software-fortified giant in the crucial AI GPU market, plus profitability gaps and supply chain risks. So what does all this mean for the stock price? How is the market valuing AMD right now?
Well, the analysis shows AMD trades at what you'd call premium valuation multiples. Its forward price-to-earnings ratio, looking ahead, is around 35x. And its EV to EBITDA multiple, that's enterprise value to earnings, before interest, taxes, depreciation, and amortization, is near 39x. These are high numbers.
Meaning the market expects a lot of future growth.
Exactly. It suggests the market has already baked in or priced in significant success for AMD in that AI accelerator market. And high expectations are definitely built into the current stock price.
But then, wait, you look at another metric, the price-to-sales ratio, PS. The report says AMD's TTM PS is about 8.4x.
That's right.
And Nvidia's is around 24x. That looks like a huge discount for AMD. Doesn't that suggest AMD might actually be undervalued compared to Nvidia, given its growth?
And this is where we get that potential aha moment connecting the dots. That valuation gap, that PS discount for AMD. It's not necessarily the market undervaluing AMD. It's more likely a rational assessment by the market of the fundamental difference between these two companies right now.
How's that?
The market seems to be valuing AMD as what it primarily is today, a very successful high-growth hardware company, which is great. But it's valuing Nvidia as something different, a platform company, one with a near-monopoly grip on the entire AI ecosystem, thanks largely to CUDA.
So platform companies with strong software moats get much higher multiples.
Generally, yes. The market places a significant premium on that kind of ecosystem lock-in and recurring potential. much more than on even excellent hardware sales alone. That PS gap reflects that difference in perceived business quality and dominance.
Okay, that makes sense. So relative valuation tells one story. What about a more fundamental look, like a discounted cash flow or DCF model? What does that suggest AMD's intrinsic value might be?
Right, so the DCF model in the analysis, which tries to estimate value based on future cash flows, comes up with an intrinsic value for AMD of around $145 per share.
Right.
And there's a sensitivity analysis looking at different assumptions, suggesting a range between, say, $137 and $159.
So compared to the current trading price,
It suggests that from a purely fundamental cash flow perspective, assuming they execute well on their current path, the stock is probably fairly valued, maybe slightly undervalued right now.
okay, so DCF says fair value, but the comparison to Nvidia highlights the risk baked into achieving that AI potential that the market seems to expect.
Precisely. There's a tension there. The DCF says the price might be reasonable if they deliver, but the relative valuation screams that a lot of AI success is already priced in success that's far from guaranteed given NVIDIA's position.
And investors should also be aware of the stock's volatility.
Definitely. The report mentions AMD's 5-year beta is about 2.03. Beta measures volatility relative to the overall market, which has a beta of 1.
So a beta of roughly 2 means it's historically been about twice as volatile as the market.
That's the idea, yeah. It signifies a higher risk, potentially higher reward profile compared to the average stock. Moves can be exaggerated both up and down.
Okay, putting it all together.
Yeah.
Let's look forward. What are the potential catalysts? What could really drive AMD stock higher from here and make that AI bet work out?
Well, there are several key things investors are watching. Number one, undoubtedly, is the successful launch, ramp up, and importantly, the market adoption of their new AI chips, the Instinct MI350 series and the upcoming MI400s. If those genuinely start taking a significant share from Nvidia, that would be a huge catalyst.
Makes sense. What else?
Continued momentum for their EPYC server CPUs is still vital, keeping the pressure on Intel there. Then there's the potential for an AI PC cycle.
Ah, PCs with built-in AI capabilities.
Exactly. Driven by things like AMD's Ryzen AI. If that takes off, it boosts their client business.
Yeah.
And finally, any tangible sign that their ROCm software platform is maturing, getting developer traction, and actually becoming a viable alternative to CUD, that would be very significant.
Okay, those are the potential upsides. Now, the flip side. What are the major headwinds, the big threats that could derail things for AMD?
The biggest, most obvious headwind is just NVIDIA's relentless dominance. Their next-gen Blackwell platform is expected soon, and it will likely push the performance envelope further, making it even harder for AMD to catch up.
So Nvidia not standing still.
Not at all. Then you have the potential for a resurgent Intel. Their IDM 2.0 strategy is their big push to regain manufacturing leadership by 2025.
IDM 2.0, that's their plan to build chips for others too, right? And catch up technologically.
Right. If Intel actually pulls that off and gets back to leading-edge manufacturing, that could seriously challenge AMD again in the CPU space. It's a big if, but it's a risk.
What about broader market factors?
Yeah, a general macroeconomic slowdown is always a risk. If companies cut back on IT spending or consumers buy fewer PCs and consoles, that hurts AMD across the board. And finally, that geopolitical risk surrounding Taiwan and TSMC hasn't gone away. It's a constant background threat to their manufacturing base.
Okay, so we've weighed the spectacular past, the current CPU strength, the massive AI challenge, the financials, the valuation puzzle, the potential catalysts, and these significant headwinds. Taking all of that into account, what's the final investment recommendation from this deep analysis, looking out, say, 12 months?
Based on the comprehensive analysis, the final recommendation for AMD stock on a 12-month horizon is held.
A hull D. Okay. Can you walk us through the thinking there? Given the growth story, some might expect to buy. Why just hold?
Sure. The rationale boils down to this. Investing in AMD right now is fundamentally a bet. It's a bet that they can replicate their success against Intel, but this time against a far, far tougher competitor in Nvidia and in a much more complex software-driven market. Given the premium valuation that the market already assigns to AMD, reflecting those high hopes for AI, coupled with the very real, very high execution risk involved in actually winning significant AI share.
Against that CUDA moat.
Exactly. And then you layer on that unhedgeable geopolitical risk tied to TSMC. The conclusion from the analysis is that the risk-reward profile just looks balanced at the current stock price. It's not necessarily screaming sell, but the potential upside seems constrained relative to the significant risks you're taking on at this valuation.
So the advice is basically wait and see.
Essentially, yes. The analysis suggests waiting for either a more attractive entry point, maybe if the market pulls back, or waiting for clearer, more concrete evidence that AMD's ROCm software is gaining real ground and that their instinct accelerators can genuinely challenge Nvidia's dominance in a meaningful way.
Uh-huh.
Until then, it's a HLD.
Right. So there you have it. AMD's incredible journey from underdog to CPU leader, now facing this immense challenge against Nvidia's platform power and AI. It leads this analysis to recommend a HLD, citing that balanced risk-reward at the current price. It really makes you think. As you digest all this, what stands out most to you about the power dynamics between a strong software ecosystem like CUDA versus pure hardware strength in shaping who wins in the tech industry today? How might that play out elsewhere? Well, that's all the time we have for this deep dive. Thanks for joining us. To get the fastest updates on complex topics like this and to keep getting insights that help cut through the noise, make sure you subscribe to The Deep Dive. We'll catch you on the next one.